Can you pay off $1 million mortgage over 10 years? Hi there, I'm Nawar Naji, a real estate broker with Chestnut Park Real Estate in the city of Toronto. Let's do some math. I'm going to show you a real life example. These clients lived in a condo for a couple of years and they've decided it was time for them to move up and get into a house, start a family, and sell that condo. So they sold the condo, bought a house in central Toronto. So this is in that St. Clair, Christie area, a detached house, 1.5 million. They put down $500,000 from the proceeds of the sale from the condo, and they end up with $1 million mortgage. Now, reality is no one wants to pay for a mortgage for 25 or 30 years. It's just too long. And I'm gonna show you here two case studies where you can pay off that mortgage in 10 years and be debt free, or pay significant chunk of that mortgage to get rid of that balance, and then, again, achieve that financial freedom, and gives you option to invest, to travel, to pay for the kids' universities, whatever the case may be or the need may be down the line. So let's do some math. You got a house for 1.5. The mortgage is 1 million. And in my analysis, I did 3% over 10 years. Now, the time of this video, October 2020, you can get a 5-year fixed 2%, a variable mortgage under 2. And then I'm assuming the second 5 years, the back end of that 10-year period, you'll borrow money at 4%. So it averages out around 3%. So in this case, in my analysis, I use 3% to look at the mortgage balance and see what happens over 10 years. So in 10 years, the mortgage renewal would be 686. So let's do this here. So you got 686 is the mortgage balance. Now, keep in mind this is monthly payment. So no accelerated weekly, no accelerated bi-weekly, no lump sums, no extra payments, none of that stuff. So first of the month, you're paying mortgage. 10 years later, you got 686. So let's do a couple of case studies here. Case study one, I should say example one, is they buy a 2-unit duplex. So a semi-detached in the city, you got 2 units. So the main and upper floor is 1 unit. The basement is a 2nd unit. And you can get that at 1.2 million. And over 10 years, so this is selling it after 10 years. So this is the net proceeds. So the mortgage pay down and appreciation. Now, if you've looked at my other previous videos, I always use 4%. So 2% inflation plus 2 in my analysis. And the reason is, I think that's more realistic, maybe more conservative. Yes, the market does do better over certain years, but some years maybe it's a little bit flat, but I like to use 4%. So I use that for my own properties, and that's what I use for my clients when we do analysis on investing in real estate, which is realistic. So, I don't want to say 8% and then, things go less. 4% is safe. So 1.2 million over 10 years, 4% appreciation. So you got, I'd call that's your arrow, 4%. And then you have your mortgage, it's called PD, which is your mortgage pay down. If you are to sell this duplex in 10 years, after paying real estate fees, mortgage discharge, lawyers, that type of stuff, this is pre-tax, there will be some capital gains, you will end up with 769K of equity. Now, this is pre-tax, so there are capital gains because it's an investment and something to discuss with your accountant. Now you can see you got a 769 net equity pre-tax, and then your mortgage is here 686. So you can pay some tax and take that money and pay down your mortgage, and you're done. So in 10 years you're done. You got no mortgage. You're sitting at 1.5. Well, whatever appreciates that, it's gonna be worth a lot more. House that is free and clear in the city of Toronto. The other option you might say is, okay, I don't have the 20% down payment plus some closing costs. I can't invest in 1.2. Maybe I can buy a condo downtown. Okay, so let's look at that example. So here I used a 600K condo, And again, same thing. So you got your 4%, you got your mortgage pay down. So in 10 years, so 4% appreciation, then you got your mortgage pay down. After 10 years, if you are to sell it, pay the real estate fees, pay the mortgage off, pay the lawyer, pre-tax, you will have 362K. Put a dollar sign. You can take that, again, that's pre-tax. You can pretty much pay half of your mortgage and you'll end up with, 300,000, whatever it is at that time. But this is the beauty of real estate, is time in the market. The earlier you get in, the better it is, because real estate is about time. It's not about timing the market, but it's time in the market. The longer you stay, the better off you are, because that'll give you options. Because at the end of the day, even though I'm showing you here examples of selling these properties, you don't have to, because what you can do is say, okay, I'm sitting on 769, well, that's after sale, but it'll be a little bit higher. You'll have some equity there. You can say, I'm gonna take, 200, does that show? 200K maybe for the kids' universities. Maybe I'll take another 200 out and put into another investment property. Or, maybe I'll take out 200K and pay down, I should say, some of that mortgage. You will have options. And the point that I want to drive is, if you have equity in your home, that is dead money. It's doing nothing for you. It's just sitting there collecting dust, maybe, doing nothing. Put it into the market, think long-term. And again, in my analysis, I use 4%. We're not talking about 15, 20, double-digit returns. No, it's good old boring 4% year over year. You'll be in a strong financial position. So whether it's to pay off your $1 million mortgage, whether to take out some money and send the kids to Harvard, if it's gonna be worth that much in 10 years, I don't know. Maybe take out 200,000 and invest it into another property. Maybe you wanna buy a cottage, I don't know, whatever the case may be, but you will have options. And the point that I wanna drive this time in 2020, the government is borrowing, it's not even borrowing, they're printing money like there is no tomorrow. And understandably, they're doing this because of COVID-19. It is a pandemic and they need to do what they need to do to prop up the economy. But the bottom line is, though the CPP and old age security, we don't know. I don't know if it's gonna be there down the line, what's gonna look like, if it's gonna be significantly less or the same. But the point that I wanna drive is, take control of your own financial destiny. Do not rely or hope that the government will be there, because you just don't know what things will look like down the line. And this way, you're taking care of, taking control of your own financial destiny down the line. Anyways, this is something I'm really passionate about. Feel free to reach out. I'd be more than happy to sit down, crunch your numbers, tell you where I invest my money into, where I'm telling my clients to invest into. Again, this is something I'm really passionate about. I'd be more than happy to sit down and discuss your situation in further detail. I hope you've enjoyed this video, and until next time, happy investing.